Good afternoon, everyone, and thank you for joining us for a Tax Practitioners Board webinar. My name's Julie Shaw, and I'm joining you today from Ngunnawal, Ngambri country. We respectfully acknowledge the traditional owners and custodians of country throughout Australia and their connections to land, waters and community. We pay our respect to them, their cultures and elders past, present and emerging. Now, just a couple of quick housekeeping messages. First of all, if you would like to access today's slides, you can do that via our webinar resources hub at tpb.gov.au/webinar-hub. Now, we'll also email you a copy of those following the webinar today. And second of all, today's webinar does count towards your CPE or continuing professional education, and you can claim 1 hour for attending today. And just in relation to claiming your CPE, we will issue you with an attendance certificate to everyone who's staying online today for the webinar. So let's have a look at what we'll be covering today. So in today's webinar, we'll look into what reasonable care means. We'll have a look at your obligations under the Code of Professional Conduct, and we'll also go over some examples and a real life case study to make your obligations clearer to you. We're also excited to have some special guests today. They're here to present their research findings on tax practitioner compliance. Then to finish up, if we have some time following the presentation, we'll share some of the common questions that are asked during the presentation today. So do pop your questions in the chat box, which you'll find located on the top right of your screen there. And just in regard to that, we have Fiona from our policy and legislation team joining us, and she'll be responding to any of the questions you have as we go throughout today's presentation. So now I'd just like to introduce our speakers for today. We have TPB board member Deborah Anderson, and as I said, we're also very excited to welcome Dr. Do-Won Lee from the University of Sydney and Dr. Bob A. Chow from University of Newcastle. So Deborah, I'll hand over to you first of all to give us an overview of what reasonable care means to tax practitioners, and then we'll go on to hear about the exciting research that we have today. So over to you, Deborah.
Thank you, Julie, and a warm welcome to everybody, all the tax practitioners that are online today. We have a massive session for you today, and I am super excited that Dr. Do-Won and Dr. Bob are here to talk to us about the research around tax practitioner compliance. And we've got a few polls today which are going to be really interesting. So yeah, I'm pumped. Anyway, my aim today is to give you all a better understanding of what your responsibilities are regarding taking reasonable care. And I'll start by saying what we, the TPB, mean when we use the term reasonable care. So your obligations as a registered tax or BAS agent regarding reasonable care are set out in the Tax Agent Services Act, or TASA for short, within the Code of Professional Conduct. And I'll call that the code because it's so wordy. As a registered practitioner, you should be familiar that we have 14 items in the Code of Conduct, and also be familiar with those code items, of course. The reasonable care obligations fall under Code Items 9 and Code Items 10. And before I go into what those code items mean in more detail, I'll just explore what we mean by the term reasonable care. So the duty to take reasonable care is a well-established feature in the common law in Australia. While the Code of Professional Conduct does not extend the common law duty of registered tax practitioners to take reasonable care, it does establish an additional range of possible statutory consequences under the TASA. So the standard reasonable care generally required of a registered tax practitioner is that of a competent and reasonable person possessing the knowledge, skills, qualifications and experience that a registered tax practitioner is expected to have. So there's no set formula for determining what it means to take reasonable care in any given situation. Whether a registered practitioner has taken reasonable care will depend on a whole range of circumstances and exercising professional judgment to consider factors like the nature and the scope of the agent services being provided, the terms of engagement between the practitioner and the client, the skills, the experience, the qualifications and abilities of the practitioner, the degree of supervision and oversight, the client circumstances, and that includes their level of sophistication, their knowledge of what you're talking about, their experiences, and the nature of any pre-existing relationship between the practitioner and the client. So any, knowledge that you have beforehand about those particular clients. So as I mentioned, your reasonable care obligations fall under Code items 9 and 10. So let's look at each of those in a bit more detail. Code item 9 requires registered tax practitioners to take reasonable care in ascertaining a client's state of affairs to the extent that ascertaining the state of those affairs is relevant to a statement they are making or a thing they are doing on behalf of a client. Code item 9 does not require you to audit, examine, or review books and records or other source documents to independently verify the accuracy of information supplied by your clients. However, and it's a big however, you cannot automatically discharge your responsibility by simply accepting what you've been told by a client. So where a statement provided by a client seems credible, consistent, and you have no reason to doubt it, you can accept it without further checking. In these circumstances, you're not just accepting what the client tells you at face value. Importantly, you have exercised your professional judgment based on the information previously provided by the client themselves, and importantly, you've made a decision that further checking is not required in those specific circumstances. And that's a really important point. On the other hand, if the information supplied by a client doesn't seem credible or appears to be inconsistent with previous claims or statements that they've made or other information that you know about the client, you do need to make further inquiries. In cases where the information provided by your client doesn't seem to add up, taking reasonable care means that you ask further questions of your client or you examine the client's records or both. So let's have a look at Code Item 10, which also relates to reasonable care. So Code Item 10 states, you must take reasonable care to ensure the taxation laws are applied correctly to the circumstances in relation to which you are providing advice to a client. Now, I'm going to call this out. This does not mean that taking reasonable care means that you are correctly interpreting or applying the law, right? So if you have incorrectly interpreted, that is not automatically a breach of this provision. However, if you applied taxation laws incorrectly because you did not take reasonable care to determine the correct taxation treatment in the circumstances, that would likely be a breach of Code Item 10. So what does taking reasonable care in applying taxation laws correctly to your client's circumstances mean? Well, we're referring to things like you would go and have a look at things like legislation or other extrinsic material, things like explanatory memorandums to acts. You would look at relevant case law, rulings and determinations by the ATO, the Commissioner's instructions in documents such as income tax instructions, BAS return instructions, fact sheets and practice statements, and other guidance materials such as what the ATO publish on their website. Also would be looking at other information published or provided by a recognised professional association or other regulatory agencies such as the Australian Prudential Regulation Authority. Can include looking at publications, information, advice or commentaries published by other experts in the area, other registered practitioners or specialists. It could also be another registered tax practitioner or a legal practitioner who has the ability and the expertise in a particular area of taxation law, so such as R&D or transfer pricing, for example, and also going to relevant training material if required. So let's explore now the extent to which reasonable care is required. You will note Code Item 9 does not simply say that you must take reasonable care in ascertaining your client's state of affairs. It clarifies that requirement by stating, to the extent that ascertaining the state of affairs is relevant to a statement the tax practitioner is making or a thing they are doing on behalf of their client. Similarly, Code Item 10 says, take reasonable care to ensure taxation laws are applied correctly to the circumstances in relation to which the tax practitioner is providing advice to a client. But what does that mean you need to do? The requirement to take reasonable care to the service for the services you are engaged to provide for the client. The terms could have been agreed during a conversation, an email, ideally a letter of engagement. And the TPB highly recommends the use of engagement letters in setting out what those terms of engagement are. And I'm sure Julie will be popping up on our YouTube channel the session we did this morning on letters of engagement. So take a look at that. Further inquiries do not need to be done if the agreed scope of the services either excludes the examination of information provided by the client or requires you to rely on the information or advice of another expert. However, and again, it's another big however, if you identified or reasonably ought to have identified that the information was incorrect or incomplete, you do need to make further inquiries. Let's have a look at some examples because they always seem to help. So in this case here, we've got, this example goes to the heart of the issue around doing a little bit more work when information provided to you seemingly is not credible. And it relates very closely to many real life situations that we see regarding the black economy. So here we have Mitch. He engages Tia, a registered tax agent, to prepare and lodge his income tax return for his tiling business. Mitch is a new client. He's asked Tia to do his tax return, and he's a sole trader who is under the GST registration threshold and has no employees. Mitch provides some information and indicates that information indicates that his turnover was $35,000 for the year and his expenses were $25,000. He's been running his tiling business for about 4 years now, and in the small talk that he was having with Tia earlier, he was saying that he's been really, really busy over the last year. After doing the returns and consulting to the ATO small business benchmarks, Tia notices that Mitch's turnover of $35,000 appears to be really low, and his business's expenses as a proportion of that turnover are really high for his industry. So Tia explains to Mitch that, you know, the ATO small business benchmarks show ranges of business expenses to business turnover, and they will be used to compare his business to similar businesses in the tiling services industry. So should Tia lodge the income tax return as instructed, it's highly likely that Mitch would come to the attention of the ATO and they will seek additional information to substantiate his income and his expenses. So Tia has the conversation about how does Mitch record cash sales. Mitch admits he needs to improve on his record keeping Sometimes he keeps notes of what he was paid after a job, but often he's really tired after work and he just forgets. He also advises that he just uses his, one personal bank account for both his business and personal expenses, and also deposits the cash into his personal bank account. Tia has that other difficult conversation with Mitch about better record keeping and advises Mitch that he really should be keeping a separate business bank account and keep his personal expenses completely separate. So Tia works with Mitch to work out what the cash income for the year was, and after reviewing the bank account, going through Mitch's diary, they revise the income and also go through and sort through his expenses, removing personal expenses that he included in error. Now, in this situation, if Tia had simply just taken 35,000 income, the 25,000 expenses, didn't ask further questions about, how do you do your, do you do cash sales? How do you record it? Ask more questions about his record keeping. She wouldn't know that, and she would not have carried out her obligations under Code Item 9 because she failed to make additional inquiries. So I hope that gives you a bit of an example on what is and isn't required. I'll have a look at a BAS agent example now because I know we have a lot of BAS agents. I can see a lot of you online anyway. Adele is a BAS agent. She's been engaged by a new client, Manny, to prepare and lodge Manny's quarterly BAS. Manny's been referred to Adele by a tax agent. So when preparing the BAS, Adele notices that certain transactions appear to be abnormal for the industry that Manny works in. And when questioned about the transactions, Manny's really vague and doesn't provide sufficient clarity that satisfies Adele that the transactions have been appropriately recorded and that they actually relate to Manny's business. So Adele raises her concerns with the referring tax agent, Manny's tax agent. And the tax agent says to her, include the transactions, but put a note for the agent so that, the agent can look at those transactions more closely when going through to do the income tax return. So Adele follows the client's instructions, and in this circumstance, she has discharged her obligations because she's raised the concerns with the tax agent. She's made a note in the books for the tax agent to review the transactions in question at the end of the reporting period. And she also makes a note of what she did in her work papers, that this is, so there's a trail. So the tax agent here must also ensure that they take reasonable care in ascertaining the client's state of affairs when reviewing the transactions. Now, they're both hypotheticals, but let's have a look at a real-life case study that did involve reasonable care. In this case study, we had tax agent Jacob Thomas, who, among other code breaches, failed to take reasonable care in ascertaining client state of affairs and applying taxation laws incorrectly. So Mr. Thomas and his two companies, Accounting Solutions Australia and Taxation and Accounting Australia, had their registrations terminated after we discovered that Mr. Thomas and his companies had breached multiple items of the code, including Code Item 1, when Jacob Thomas misled us by advising that Jeremy Thomas, his son, had his employment terminated following a previous decision by the board in 2021 to terminate his tax agent registration and imposed a 5-year ban. We discovered that Jeremy's employment was not terminated and the company did continue to employ him and allow him access to the tax agent portal. I'll just start with Code Item 1 is act with honesty and integrity. Code Item 7, which is ensure services are provided competently. He was found to have breached that because he lodged 15 tax returns for clients and didn't ensure that there was sufficient evidence to substantiate work-related expense claims and other deductions. And this resulted in ATO auditing these clients and imposing tax shortfalls. So code item 9, as we talked about earlier, was he failed to take reasonable care in ascertaining the client's state of affairs. And code item 10, he failed to take reasonable care in applying taxation laws correctly. As a result of these breaches, our board conduct committee found that Mr. Thomas ceased to be a fit and proper person to be registered with the board. The board conduct committee terminated his and his company's registrations and imposed a 4-year ban prohibiting him or his company from making an application for registration again. The board conduct committee also terminated the company registration because it no longer met the registration requirement that each company director is a fit and proper person. So Mr. Thomas and both his companies applied to the AAT applied for stays of the decisions, which were refused by the AAT, and therefore supported the board conduct committee's decisions. So I'm going to hand over to Julie now, and then we can talk about some of this research.
Thanks, Deborah. Thank you for setting the context there. That was really great to set us up for the rest of the presentation today. So now I just wanted to hand over to Dr. Duwon and Dr. Bobbe to give us an update on their research around tax practitioner compliance, which I'm really looking forward to hear, and also excited to hear the results of the survey that we conducted before the webinar today. So over to you. Thank you.
All right, thank you very much for the introduction. First of all, I want to thank TPB for arranging this webinar and inviting us again to discuss our research. But also, I thank all the live viewers today who made time to attend the webinar. Now, as we know, all tax agents and BAS agents are expected to adhere to the professional standards and ethical guidelines when providing service to their clients. However, there are certain circumstances where not all reasonable care can be taken. For example, sometimes tax agents might face heightened client pressure that could potentially influence the behavior of the agent. This cross-institutional study between University of Newcastle, UTS, and University of Sydney is trying to answer what are these circumstances. Next slide, please. In the last few years, we have seen several short-lived and one-off government schemes provided to the economy, such as the institutionalization of the JobKeeper scheme during the COVID pandemic. Recently, there were a lot of natural disasters such as floods, bushfires, and cyclones, where the federal and the state governments have activated a disaster recovery allowance scheme to aid those affected by these disasters. Now, while these government schemes are very important in providing financial support to the individuals and businesses, and also specific sectors in certain times when the economy needs this financial boost, these schemes were urgent in terms of the support and also timely, and had a very short time frame for the recipients to be able to apply and receive the scheme, which meant that the government might not have had sufficient time to establish a rigorous verification and monitoring system for all of the claims. So as you can see in these articles on the screen, there have been a lot of fraudulent cases that were detected. And I can say that not all of them have been prosecuted. And one of the reasons could be that due to the rapid changing circumstances surrounding these changes and different criteria for different types of schemes, there could have been honest mistakes, just led by the confusion of the different eligibility criteria. There could also have been loopholes. For example, in JobKeeper, some of the claims were expected decline in turnover, not actual. So there could be exploitation of these loopholes. And these can't be differentiated from fraud itself. Next slide, please. So how does pressuring from the client to the agent work? Well, because the government schemes gives a lump sum reward to the taxpayers, there's a huge motivation for the taxpayers to try to falsify their reports in their income and try to be eligible for these schemes. Accordingly, tax agents might also be pressured because their clients want to receive this and keeps on asking the tax agents to collude or condone the false reporting of the client's income itself. Why would the client actually start to do the pressuring? It could be because these schemes are surrounding dire financial situations where the client is financially dependent on supporting their business and household through this scheme. Additionally, a lot of these subsidies had a shelf life. So there was a certain week or 2 weeks for all the applicants to get their filing, the reports and the files all processed by the tax agent, which asserted some additional timing pressure. Third, there could have been a lack of familiarity. So there might have been misconfusion or just mistakenly, the clients could have been mistaken by the eligibility that they might have thought that they're eligible, but in reality they were not. So they could have been actually looking for certain tax agents who were likely to make them eligible. So overall, these factors can explain why some clients would like to exert additional pressure to the clients. Right. Next slides will be presented by Bobing.
Thank you, Duan. So I like to show how frequently these government subsidy schemes were provided in recent years. For example, JobKeeper was available from March 2020 to March 2021, including the original period and 2 extended periods. Moving on to disaster recovery allowance, these schemes were activated 8 times in the last year alone across the country, from New South Wales flood to more recently Cyclone Ellie in Western Australia. Let's move to the next slide. Next slide, please. Right, so these government schemes share some similarity in the eligibility criteria, especially they utilize a fixed threshold in an income test. So, for example, here, JobKeeper eligibility criteria requires a decline in turnover, which was 50% for large businesses and 30% decline for small and medium-sized businesses. Let's look at the disaster recovery allowance scheme in the next slide. Oh, one before, please. Right, so for the disaster recovery allowance eligibility criteria, here's an example of Cyclone Ellie. The scheme required the income test, and that income test basically says the applicants must have earned less than the average Australian weekly income, which is $1,250 per week. So this fixed threshold can create the all or nothing sort of situation for applicant. Thereby, applicant could put more pressure on their tax agent to become eligible for the subsidy. Next slide, please. The aim of this research project is to determine how client pressure might influence tax agent behavior and to understand tax agent attitude toward the code of professional conduct. So key research questions are presented on this slide. Those include, how do tax agents respond to pressure from client? To what extent do tax clients cooperate with client or resist client pressure? Finally, what factors affect tax agent responses to client pressure? Next, please. Now we adopt a survey research approach here. And the survey provides a hypothetical scenario regarding disaster recovery allowance. The survey link has been circulated among the TPB members, especially for those who register for the webinar. The key questions from the survey include the reasons for non-compliance, the perception of code in practice, tax agent willingness to cooperate with the client, and some demographic questions. Next slide. Now, let me provide a snapshot of the demographics of respondents. I first like to take this moment to thank all the respondents in the survey. The survey received more than 1,100 views, and out of them, 184 respondents complete the survey. So I really appreciate your participation. So 81% of the respondents have more than 10 years of experience in the industry. 90% of them are currently owners or partners of their businesses. The other statistics on the screen shows the high competitive pressure in the industry. 61% of the respondents agree or strongly agree that there is a high competition in the profession, and 46% said they need to work harder to attract more clients. Next, please. Next slide. Right, so this slide shows the scenario used in the survey. The first part basically explains a hypothetical disaster recovery allowance scheme activated in the local area. The most important part is in the middle. So it states, you have heard that tax agent who works for a local tax service firm has been successful in obtaining the government disaster support schemes for clients. However, some of these clients may not have been eligible for the allowance. So you suspect that tax agent might have bent the rules to secure the payment. In the survey, we asked respondents to provide possible explanation for this tax agent behavior. Before we discuss the actual result, let's see what peers suggest. Over to you, Duan.
Thank you very much. So if we see the next screen, this is the famous fraud triangle, which suggests that there's 3 conditions that could increase the risk of fraud. And these 3 conditions are motive, opportunity, and rationalization. So let's start with a simple example. Let's assume I'm a local gang member, and my friend has a vicious plan to rob the local bank. He pressures me to join with him because he knows that I need the cash to care for my sick daughter. So that's my motive and pressure. Now, my friend observes the local bank for the last few days, and he says that there's no surveillance cameras. The guards always go for a 10-minute coffee break exactly at 10 a.m., emptying the bank. So we identify an opportunity to rob the bank. Now, I go home and think overnight. After having a couple of beers, I rationalize myself, saying that I'm not harming anyone. I'm just taking back what I own or what the greedy rich people owe me. And the bank is to blame, as they haven't been vigilant enough to install surveillance cameras. So the next day, I say yes to my friend. And that's basically every scenario for every heist movie you have seen for the last 2 decades in Hollywood, such as The Heat, starring Al Pacino and Robert De Niro. Now, our survey was not that exciting, but we have tried to frame our questions in the survey so that each of these questions or conditions I asked, and we were trying to see why the tax agent in the hypothetical scenario might have bent the rule. Next, please. So let's start with why. Let's foresee what types of motives and pressures could exist. Now, we can see here that when we ask whether financial loss or the financial motive exists, 74% of the respondents said yes. Losing a client leads to financial loss, and that could be a reason there was bending the rules. Next slide, please. When we look at reputation could be gained, 69% said yes. Once you gain a reputation of bending a rule, you might be able to attract more clients who aren't actually eligible. Next slide, please. 52% also agreed that the tax agent might have been pressured to bend the rules by the superiors. And this is social pressure. So not only the motives, but the pressures exist. Next slide, please. If we now look at the opportunity side, how this can be possible, we looked at whether the firm who the tax agent works for is responsible. And we see that 78% of the respondents said that the firm is turning a blind eye on the situation. If we see the next slide, 90% agreed that the firm lacks an effective internal control system in place, which allows this bending the rule to happen. Now, if we move on to the next slide, we'll be looking at rationalization. And rationalization is always very hard because it is a difficult condition to actually observe. The other why and how are external. But when we look at about the rationalization, it's in the mind of the tax agent. So while we look at this, we can actually see that the overall response is scattered a bit across all possible 7 answers, but we do see that 62% agreed that the tax agent at least believed that bending the rules helped the client. The next 2 slides are going to be quite interesting because when we asked whether the tax agent was hurting someone, 92% said yes. And if for this person to rationalize and to act on this fraud or bend the rule, they should have answered oppositely. They should have thought and rationalized that they weren't hurting anyone. So our results are actually opposing the rationalization of the behavior. This is also consistent in the next slide, which shows that 66% of the respondents found that the client was not to blame. So how can we interpret these alternative results? And we could think that maybe the code could be the answer. Now, if we look at the next slide, we actually look at the perception of the code within the profession. And we can see that 93% agree that the code is respected in the profession. In the next slide, we see that 94% agree that the code is well followed in the profession. And in the final slide, we see that 94% agree that if agents break the code, they should be punished. So the next slides. So Bobe.
Thank you, Duan. So now let's do a small experiment. I invite you to participate in live polls. There will be 2 questions, and we will discuss the result after you answer both of the questions. So the main question would be, what would you do if you were in the same situation as the tax agent in the scenario? Let's open the poll. So I'm not sure whether this poll has been opened now. Okay, it's open now. So both polls are open. So we'll give you a couple of minutes to answer both questions, and then we will check the result together. Okay, so before we look at the result, we have around 4,300 tax agents attending the webinar today, which provide a good representation of most tax agents in Australia. So the average behavior of ourselves should reflect the average behavior of most tax agents. This means we would expect the distribution of the responses in the first question should be similar to that of the second one. Now, once all the poll is closed, and we will check the result. Now, I think we're ready to share the result. I will invite Duan to explain the result.
Right. So if we see the results for poll 1 and poll 2, now as Bobe just mentioned, we should expect a similar results for the 2 poll results. Now, if we look at the first result, then we can see that 73.7% of the respondents said that they're very unlikely to actually help the client, and 20% said unlikely. So around 90% said that they're unlikely or very unlikely, where the average is very unlikely. Once we actually look at your perception about most tax agents, then the distribution is quite different. We can see now, once you see the results for Code 2, that only 44%, you believe that only 44% of the tax agents would be very unlikely to do it, and 37% unlikely. So the average has shifted from very unlikely to unlikely. And this is consistent with the theory, where it's suggested that this discrepancy documented in psychology is that individuals believe that they are more ethical than the general population. So the theory has already, and empirically we have already found that the first polls question is always higher in terms of being more ethical than the second one. Let's actually see what the survey results were, because we know that the live poll is very active, but we didn't have enough chance to critically assess the scenario. And we only had 5 choices instead of 7 or 11 choices in the survey. And we had only 2 questions. So if we look at the next slide, these are the results of the survey. When we asked the respondents how they will behave, we see that in this hypothetical setting, the average response from the tax agents when asked whether you will bend the rules is that they are going to be very unlikely that they will bend the rules, where the average, where very unlikely is 1 and unlikely is 2, up to very likely 7, the Likert scale, that 1.442 is the average. If we look at the next slide, which asks the close peers, then the respondents now evaluate their peers as being slightly less ethical or less compliant, in the sense that the distribution shifts rightwards, and now the average is 2.327 at unlikely. And now if we ask the last question in the next slide, which is, what do you think about the general tax agents? Then the respondents believe that the most tax agents are slightly unlikely to bend the rules, where the average is now 3. So we do find that the tax agents rate themselves as being highly compliant, but the respondents also perceive their peers of other tax agents to be less compliant than the average of the individuals. So let me summarize our overall findings of the results and implications. We have established that the main motives to cooperate with clients under pressure to achieve this non-compliant behavior is due to financial gain, reputational gain, and pressure from superiors. The circumstances or the opportunities exist when there is a weak internal control system in a firm. However, there is weak support for rationalization, evidenced by the disagreement from the respondents on the statement, such as the tax agent was hurting nobody and the clients should be blamed for in the situation. Next page, please. So we find that the rationalization is weakened because of the high standards that our tax agents who are following the code, because they are doing the right thing. And doing the right thing is really important, especially due to the fact that the role played by the tax agent and the BAS agents will become more and more important in the coming years. We'll see high cost of living and deteriorating financial conditions of our clients. But also we are all expecting more volatile weathers in the coming years. Through our research, we hope that the last result shown on this slide gives you some food of thought, that most tax agents are more compliant with the code than you might think they are. We hope that this strengthens your trust of the profession and motivates you to keep living by the code. Thank you very much.
Thank you so much, everyone. That was a great presentation. We'll go through now and ask some of the questions that we've received, some of our FAQs as well. So, Deborah, I might address the first question to you. And this one is, in the webinar, you sort of talked about there being no set formula to determine if someone's taking reasonable care. So if that's the case, how does the tax practitioner actually determine that they are meeting their requirements?
Great question. I guess it comes down to every situation is different, right? So every situation needs to be considered on a case-by-case basis, having regards to the specific facts and circumstances of that case. And so ultimately when, we look at it and determine whether a tax practitioner has complied with their obligations, it's under Code Items 9 and 10, it will be a question of fact. But a good question that you can ask yourself, thank you to our guest presenters, is what would my peers and colleagues do in this situation, right? And, because reasonable care is what would a qualified, ethical other tax practitioner do in those circumstances.
Fantastic. Thanks, Deborah. Duwan, I've got a question for you here about the research. Someone's asking us, did the research separate those applications for benefits done through tax agents as opposed to those that were done by the person themselves, so a DIY as opposed to a tax agent application?
For our research, we're assuming that the clients came to the tax agents for the reporting. So there was no DIY in our assumption.
Okay, great. Thank you for clarifying that. Okay, the next question I have here is for Deborah again, and this one is about engagement letters. So you mentioned using an engagement letter to set out the scope of services to be done. Can you let us know if engagement letters are compulsory?
No, they're not compulsory. They're not a specific requirement under the Code of Professional Conduct, but we do highly recommend that you use them. Just reiterating that, it's because they can help you to establish a really clear understanding of your engagement between you and your client. They're a simple way that, you can comply with your code obligations by making sure your clients are aware of all of the things that you do in your business and confidentiality, all of those types of things. And they also help with scope creep for yourselves, help with future conflicts. And as I mentioned, one of the most common things that we see is that we get a complaint from a client, and had there been an engagement letter that the client or the agent could go back to, that particular complaint would never have happened in the first place. So, yeah.
Thanks, Deborah. I have another question for you, and this one is asking if we have a very good idea that a client so they've got a client and they've gone somewhere else because you would not accept the figures that they've provided to you, then went on to lodge a return that was incorrect, should that tax practitioner advise the ATO that they know that the client has lodged something that is not correct?
That's a really good question. Maybe, who's Fiona on the line? Is she able to give the policy line on this?
I think Fiona might not have audio today. But
I remember her saying that. Sorry.
No, that's okay. I think we can... Oh, sorry, was that you, Fiona? No, that's okay. I think this one goes back to the confidentiality, Deborah, under Code Item 6. So, yeah, I think that, if you think that the client is acting illegally, you don't necessarily have an obligation to notify the ATO. And I guess you could also be disclosing client information in breach of that confidentiality item if you did so. There is
also be able to, whistleblower.
That's correct. Yes. Yeah. So, I think we can probably send out some information following the webinar around the whistleblower provisions and also around Code Item 6, which I think will address that question quite well. Okay. Got another question here. It's sort of a little bit similar, Deborah, but it's a person who has a client who's not listening to their advice. Would you have any recommendations on what they should do in that situation?
Depends what the advice is, I guess. That's that's, I guess, the important part of it. I always recommend that you put the advice in writing that covers you, that you have actually given the right advice. I think any practitioner knows that what you say is not necessarily what they hear, and that, comes down to understanding as well. From the non-agent or the client perspective. So putting it in writing is always the way to do it. And again, as I said, it depends on what the advice is. If they are, if we go back to kind of like what we were talking about in this, about them pushing the boundaries and wanting you to do something that is not correct, look, walk away. It is not worth you losing your license or worse, and it's not ethical. It does not fit into the Code of Professional Conduct or what any professional will do or expect of, to be done. So walk away.
Thanks. I think that's good advice, Deborah. I think we've addressed most of the questions there in the chat. If there's any there that we haven't got to today, we will address them outside of today's webinar. We'll take them offline. I'll just give some information now on how to stay in touch with us at the TPB. So I'd just really like to encourage everyone to follow us on LinkedIn, Facebook and Twitter. That's where you'll get the most up-to-date information we have available there. We also have our TPB e-news, which is our monthly newsletter, and we encourage everyone to subscribe to that if you haven't already, and you can do that by going onto our website at tpb.gov.au/newsroom. And also, if you're interested in attending some more of our webinars, they're a great way for you to keep up to date as well. And once again, if you go onto our website, we'll be updating that page fairly soon with some webinars for June, so you can register for those there. And also, as we always say, you can subscribe to our YouTube channel to receive notifications when we post new videos. And we do have a comprehensive library of webinars available for you to watch there. And as always, you can still claim your CPE for viewing the webinars as well. So that's great to use as your CPE. And now just finally to finish up today, I just wanted to say a big thank you to all of our presenters. It was really great to hear from you all and some really useful information there for everyone. And also thank you to Fiona for assisting with the questions today. And finally, just to finish up the webinar, I will be launching an exit survey, which will open in your browser once you leave the webinar today. And we'd really appreciate it if you could just take a moment to complete that survey. It's quite quick, and it does just really help us improve on the webinars, and also gives us some ideas. If there's a topic that you want to hear about, let us know, and we'll try to incorporate that into our program so that, we're giving you what you want to hear about. So once again, just thank you to everyone for joining us today, and we do hope that you enjoy the rest of your day. Thanks, everyone. Goodbye.